Good morning, everybody. What a crazy day yesterday. Now, let's remember the day before, I said to everybody, snapshot it. We're going to see 406 on the SPY come Wednesday. Now, it might happen after Jay Powell speaks. So, what happened and how did it play out yesterday? Well, let's talk about it real quick. As you can see by the chart of the SPY, massive selling, massive outflow. So, is there a chance we bounce today? We could bounce a little, but understand when you zoom out and you look at the way that the market reacted on Tuesday. Remember, Tuesday, heavy volume day in the SPY, over 103 million. Previous days, 52 million, 64 million, 56 million, very light days in anticipation of the Fed's announcement this week. So let's get right into it and how I banked money yesterday. What I told Discord and what I told YouTube pre-market was there's going to be a lot of volatility. Expect a spike at 2 o'clock, then a dip, then a spike, a dip, a spike, a dip, a spike, and a dip. Remember, Fed Chair Powell was going to speak at 2:30, and I mentioned to everybody, pay attention whether he's hawkish or dovish. Hawkish meaning still aggressive. We still need to continue rate hikes and push through and battle inflation. Dovish would be like, okay, we've seen enough. We could pivot now. We could slow down. We could possibly think about rate cuts by the end of the year. When asked about rate cuts by the end of the year, he said no. So here's the discrepancy. Fed Chair Powell says possible rate hikes in the future. Fed Chair Powell says it's not up to the Fed to protect Americans, to pay the Americans' bills, right? So he's basically saying he's going to be as aggressive as needed. Okay, their next meeting is in June. Now, here's the discrepancy. The market has 3 rate cuts based in by the end of the year. Now, how do I get that number? I look at the Fed funds rate prediction for the end of the year, right? It's just over 5.18. Now, you look at the market's prediction of where the Fed's fund rate will be at the end of the year, and it's currently 86 basis points lower. So the market is saying, okay, the Fed is saying possible rate hikes continue. We haven't even thought about rate cuts. The market has it priced in where there's not a rate hike in June, so no more rate hikes. The first rate cut of 25 basis points coming in September, then probably November and December, which would be 75 basis points by the end of the year. So that's what the market's anticipating. Now, why does the market think that? Because we're in a recession. Sales are going to be hard. People are going to be losing their jobs. So what's important to the Fed? Well, the first number that's important to the Fed is the number that's going to drop tomorrow morning, the jobs number. And then you want to look at CPI, PCE, and all that good data going forward to see where inflation is. But how I banked yesterday is I basically warned people. Now, the warning was good because I basically told people, hey, listen, if you're in your position, and here's what I was scared was going to happen. It was going to spike. People are in puts, so they sell at a loss. Then they see the market drop and they say, hey, I want to re-enter the puts. I was going to be right. So they re-enter the puts. The market spikes again and they lose for a second time, even though they were correct and the market dropped. So me, what did I do? I looked at the volume earlier this week. I said outflow was pretty strong. I expect that to continue. We all know the Fed is going to say 25 basis points. I believe they're going to be hawkish because they haven't changed their tune yet. Now, them increasing interest rates puts extra pressure on these smaller banks. So you could see last night after hours, I think it was what was it? Pac West went down as much as 60%. Now, this morning pre-market, Pac West is only down 47%. Western Alliance, which is another one of Jim Cramer's great banks, is off 25% pre-market. It was off as much as, I don't know, more. Apple down 1% pre-market. Now, let me explain. Apple has earnings after the bell today. So what are the expectations? Well, we already know that iPad sales should be down. MacBook sales were down because 40% last quarter. So what are we expecting? Well, even if Apple beats, everybody's going to be listening to guidance. Now, Foxconn, one of their suppliers, who also supplies Samsung, who Samsung had a terrible quarter. So I'm actually expecting Apple to come back. Now, what could Apple say to boost their call? They could talk about a buyback. It's inevitable. Apple buys back shares continuously. So they'll probably announce a $100 billion buyback. That seems like a good number. Market will like that. But what it's really going to pay attention to is the forecasting. So where could Apple go? All right, well, let's talk about it. Apple is 167 it closed at. Let me just take a look at the 1 month. We've had 2 days of outflow. So if Apple's going to break higher, the sky's the limit. Why? Because if you look at the Apple chart, we're touching the all-time highs that we saw last year. Let me just make sure. Yep. Back in what was it? October 2022. So Apple could explode what? 20 points higher? 20 points higher would be what? 12%. So let's say Apple beats, and gives great guidance, which is impossible for them to give great guidance. But let's just say you're talking about 20-point move higher. Okay? Simple as that, 187. Now, reality sets in. Apple probably will beat. They'll probably announce a buyback. I don't think they're going to announce good forecasting at all, and they're going to warn. Now, if the warning is that it's only going to be 5%, they should like that, and Apple might be maybe a 2 or 3% mover in either direction. If they announce a double-digit decline, then I'm looking for Apple to potentially drop 9, 10, 11%. Let's just say 10% to do the math for everybody. At 167, we'll just assume it closes there today or somewhere around that range. 10% would be what? 16, close to 17 points. If you're at 167 and you do 17 points, you're talking about a pullback to 150. Now let's remember, Apple was up 30% this year. Okay, so again, I am a bear. I've been saying that for a number of days. So let's talk about what could potentially happen today. Well, we've seen 2 days of outflow. It was somewhat massive. Let's pull up the chart. Let me just get over there. Let's see where the chart is. Here we go. Okay. Closed at 408, sitting at 406.93. Again, my prediction, we see 406. We actually saw 405 after hours when the banks were fearful. All right, let's just go back to I guess we'll go back to what? 2-hour chart, see what we can do here. Okay, now if you're looking at the volume for the last 2 massive dips. Now, what did we see the last time we had a massive dip? From 415 to 407, right? Right where we are now. We basically saw the same thing. We were 414 to 407. We closed at 408. What happened? The next 2 days, they bought the market up until we had some selling right here on this date. What was it? May 3rd. Even though they bought the next day on light volume, you could tell the market was going to go down. So again, I'm anticipating we see something similar. Even if we see a green slim day here and maybe the next day, so we're talking Thursday, Friday, which I don't think we're going to see. And I'll tell you my prediction in 1 minute. I do believe we're going to drop down lower to the 404 level. And if we attack the 404 level, we'll talk about the dark pool levels and we can see what's out there. Okay, so that's my prediction right there. Now, as far as my prediction today and tomorrow, we'll just tie it into 2. Thursday and Friday. I already told Discord yesterday that I could expect some bloodiness. Now, I'm not saying it's going to happen because I could easily see a slight bounce or at least a little support before we drop down more. So I don't know if it's happening today or tomorrow or maybe Monday or Tuesday, but understand a 3% pullback, and we'll pull up the 4-hour chart here just so you can see what I'm talking about. Oh, the 2-hour chart should suffice. Let's bring up the 4-hour chart, though. 4-hour chart, a 3% pullback. Let's just look at these days here. Strong volume. Remember, look at the volume line here. Okay, well, we exceeded that volume line 2 different days. So I'm going here. I'm going, okay, what if we pull back to this point? So we look at the top angle, 401, the bottom, 385. 401 to 385 is 16 points. Okay, so let's take the top angle over here. Where were we? 416, 417, 16 points from 417 would be 401. So given a bear scenario of Apple earnings, the best case scenario, okay, the best case scenario is the SPY's at 401. Whether it's Friday or Monday. Well, you're talking about the SPY. That's like a whole 1.5%. I'm saying if Apple misses earnings, okay? If Apple misses earnings based on the volume that I'm seeing, your best case scenario is 401. Now, your worst case scenario could be a massive drop. But I went back to March right here. These numbers, I looked at this drop and the percentage of drop, and I think that the SPY, based on those numbers, and again, I'm a math guy, I'm a patterns guy, I'm a volume guy. That's how I analyze the market. I could see the drop to 395. So you say to yourself, 395, we're sitting at 408. Let's just say 8 points plus another five. That's 13 points. Matt's telling me there could be a 13-point drop. Well, yeah, that's 3%. Do you remember how many days last year we saw a 3% either drop or rise in the market? It was over 80 trading days. So almost like a third of the time we were seeing massive movement. 80 trading days seems kind of large. Maybe that number seems a little too big. I'm gonna have to check my records. But I remember I kept mentioning it last year. I'm like, where maybe it was 50. 50 seems more logical. But I remember into the year last year, I mean, we were 3 months in. I'm like, 21 days so far. So let's do the math. 3 months in, 21 days, 12 months of trading. Three times four is 12. 21 days times four is 84. So yeah, the 80 number could be right. All right. So what other stocks and things do I have on my watch list? Again, even if today bounces a little higher, it would not surprise me. And it's there to get all those put holders, and there are a majority of put holders out there to say, oh shit, I'm going to sell on Thursday. And when the market drops on Friday, which is a possibility, I mean, it could happen today. I'm just giving you a scenario of how it could play out. Today could be a bounce here to there, finish at 410. Tomorrow can be an ugly day, finish at 404. So we hit that 404 number on Friday. But the fact that we went from 408 to 410 today, up a 0.5%, all those put holders that have expirations tomorrow on Friday will be like, I'm getting out. Now, right now, I can tell you my bearish positions, I'm only in my small account. So that small account is holding till get the best value. Now, my larger options account, I only trade about once or twice a week. I mean, we're talking about a large account. I take a major block position. Yesterday, I was in puts, SPY at 412. Now, did I ride the SPY down to 408 end of day? No. I got out at 410. I got out before the Fed. Anyway, let's just go. So I'm holding a couple of bearish positions. I'm looking at the Qs this morning. They're up 0.13%. I'm in the SQQQ because I think tech's going to drop. Now, when I look at the SQQQ, here's what you got for the last couple of days. It's a triple bear of the Qs. That's what we are. It almost reminds me of like UVXY. It's supposed to go down because the market's supposed to get higher. But what am I seeing? Well, a bunch of days ago, what was it? March 24th. I mean, sorry, April 24th. We spiked up on the first spike. Okay. Then we dropped, of course, because everything's by the dip in the market. But I say to myself, what if we go back to that spike or somewhere around there? So again, I did my math. I said the market drops like 3%. You multiply, sorry, by 3%, right? You multiply that by three because it's a triple bear scenario. Well, now you're at 9%. Okay. The SQQQ is at $30. Let's just round down. 9% is $2.70. So we're talking about a $33 upside potential. I'm in the 29.5 calls. I think I paid $83 for them. So my break even point is $30.33. Well, right now we're above that. So anytime I'm in a good trade, I'm a bear right now, and I see bearish flow in the market, I'm going to hold that position. All right. What do I like to start each day with? I'm going to bring that up right now. Let me see if I can just share the screen real quick. Discord, here we go. Because what do I like to do each day? I like to look at the same things to start the day. It doesn't take a rocket scientist. It helps me figure out my positions. So I've got the SPY levels up here, the dark pool. So the fact that we're sitting at 408 is right here. What do you see underneath? Very small levels of dark pool action. In fact, in the market yesterday, there was one position, $1.8 billion, that was either loaded or offloaded right at 408. So let's just come up with the scenario that it was offloaded and that it was bearish. There's a ghost zone here. So when I tell you the downside potential, oh my God, it looks really juicy to me. I get excited. Even if it doesn't happen today, like I said, we could bounce up to this 410.02 level and then drop tomorrow. Now, again, if we bounce higher, I would be looking for a rejection at 412.78. But again, we're at 408 today. I don't even think we get that high. Again, I'm a bear. I'm open to both scenarios. All right. So that's what I start out today. And then I'll look at the top flows from yesterday. Or is it top flow? It's probably just top flow. I like to add an S here. Top flow. So bullish, Amazon, small banks. Well, we already saw what's happening to small banks today. Apple, please. When you see the top flows, they could be buying these calls or institutions could be selling these calls. So when you see Apple as a top flow and calls being here, you don't have to say Apple's going up today. You could say, wow, institutions really sold a lot of calls yesterday. Whereas you have AMC, you could say AMC. Remember, I mentioned it at $4 and like 14 cents. What was it, 2 weeks ago? And I said AMC is going back up. They're just manipulating it, right? So the AMCs, I would say, okay, there are more called buyers than called sellers here. Okay. Same with the Qs. I would say, okay, well, people are buying puts, buying puts, buying puts, maybe hedging. And the IWM, the Russell, has been on fire. So it's no doubt they're buying puts on the Russell because the Russell is actually holding its own. So then I'll look at the market net flow. Net flow, the market. Now, somebody asked me yesterday after I made a posting about net flow, what does that mean? So I'll explain exactly what that means. Just give me 1 second just to pull it up. All right, market net flow. So they said, what is the white line? The white line is the price of the market, where the market's sitting. SPY 408. Here you go. Okay. The green line is indicating the premiums for the calls. Okay. So you can see it's pretty here. It's pretty up here, pretty high. What do you see? The premiums for puts are even damn higher. So there is a mix in the market. There are definitely people buying calls and people buying puts, people selling calls, selling puts. But again, there are more put holders than call holders right now. So what I look at, I would also want to look at the net flow for the SPY. Okay, we just did the market. Now we can just look at the SPY, which basically is the market S&P. But I like to focus on this. Why? Because the call premium is -5. -5. It's under zero. That's very bearish. Stock price, SPY 408. We saw it. We saw it drop. We saw it drop 404 previously. The cost for puts extremely high for the SPY. Still over 5, between 5 and 10. Spiked as high as 10. Maybe it'll spike up here. So again, that's what I look at to start my day, to say to myself, hey, Matt, are you going to be bullish, bearish? Again, just because I'm bearish doesn't mean I have to get in and play today. I want to be a winning trader, a successful trader. So what does that mean? It means I take my time. I wait for A+ entries. If I'm a bear, I'm waiting for a spike. I'm waiting for resistance so I can see resistance. Remember, the market doesn't just go straight down or straight up. It fluctuates. And I showed everybody this one chart yesterday when I mentioned it would be fluctuating. It's not so good anymore. It looked better yesterday because we were fluctuating right as the Fed spoke. And then we had that massive drops. So then you have to ask yourself, okay, we had that massive drop. Is it over? Have we seen the worst? Anybody that's in calls, yes, maybe for today or for a couple of minutes, great. But look at the chart. Is the worst over? Are we all of a sudden just going to rebound and rebound strong in a V? No, there's more downside potential, especially when what everything's happening. Here's your 3-month chart. Well, how do we get that spike up? We got that spike up because institutions didn't get rid of their positions, some of them. All right, so let me just see. Man, I've got to run. I've had doctor's appointments the past 2 days for my daughters. I've got another appointment this morning. I appreciate everybody watching with me. Please, if you like the video, thumbs up, and I'll be back tomorrow for job numbers. If you like what I do, you can join our Discord, soc-platform.com. Romeo is live trading today. Pretty sure of it. Have a great day. Remember, secure profit. Have a complete strategy. Trade successfully. And come join me tomorrow morning, 8:30 a.m. See everybody later.